solar and trade investment policy in 2025. So for solar, the current landscape is unfortunately quite complex and heavily trade restricted. And we'll start with China. China has definitely been the focus here. So on day one, when Trump entered office, he rolled out something called the America First trade policy. And so the whole idea here is that the administration is intending to use tariffs and other trade remedies to address what they're seeing as unfair trade practices in other countries, the procurement strategies that you might want to pursue given all that's happening in the space in terms of trade and investment in these industries. So these are some of the things that we are recommending now to our clients. And I think the first thing is, if you can, secure your US supply now.
A US tariff update. Our webinar, like normal, is going to hold the same structure. We will do this short little introduction, and then we will jump into the main content, which is going to be me speaking for a little bit about some philosophy, and then James speaking for a little while about full US updates, as there is a lot of them. Expect to learn a lot. And then at the end, as always, we will do questions, a Q&A section. Keep in mind there's a lot of content because there's been a lot going on in the US. So if we do not get to all the questions, we will have some availability afterwards or in other formats to answer those questions. So don't worry, still submit your questions and we will get to them eventually, I promise. First, I'm proud to introduce James Kim. He's an attorney at ArentFox. He deals primarily with helping companies with import and trade law. He also has a super insightful newsletter, so definitely give that a look. And he works in many different sectors. He works in many different sectors, solar, batteries, automotive, e-commerce, a lot. So his expertise spans quite a few different categories. I am Rylan Gordon. I'm the technical director for Sinovoltaics. I cover all of our integration between what is happening and the data collection on site for our clients, and then relaying that to our clients so everything is fully understood, captured, and real remediations and actions can be taken. I have a background in PV EPC work, as well as a degree in material physics. So I will jump into a quick presentation and talk about the philosophy that we look at supply chain risk mitigation for Sinovoltaics. First, I'll give a quick background on who we are, because although many of you guys know and understand what we do, it's always good to give a background and update people who might not know yet. So Sinovoltaics is a Dutch and German led and owned company. We have auditors and inspectors worldwide, as well as headquarters all over the world. We have strong partnerships with reinsurers such as Midi Re, and we are a leader in innovation in solar and energy storage for data analytics during manufacturing. We are the proud creator and co-creator of Selma and Bessential, but those things are for a different webinar, so we will not linger on them too much. We have projects spanning all over the world. We have very interesting insights as we are involved in projects very early during manufacturer selection, all the way through projects being constructed on site. And we've had the privilege of working with leaders all over the world for some of the biggest projects that have ever been distributed. Key questions to think of during my quick presentation is, and this is primarily for the supply chain managers and procurement managers of the world out there, just thinking through concepts such as, what will your company do if there is a sharp increase in price, if timelines increase drastically and unexpectedly, or what happens when expected capacity of different critical equipment is less than you expected? Key questions. And the point of view that I'll be speaking of this on is, like I mentioned, Sinovoltaics has the opportunity to monitor these products well before contracts are signed by manufacturers. But once contracts are signed, then we are involved in the process during manufacturing, and then through shipment, and then as well as on-site as well. And I've had the privilege to see a lot of these projects through construction, which is a very, very cool thing to see. And then we also do those sections independently. So I've had the opportunity to work with a lot of companies who have not used our services upstream, but they have issues downstream with installed projects. And so we've gotten a lot of transparency on what happens if these risk mitigation protocols are not implemented on projects, and kind of the downfalls of not implementing these things as early as possible. Here are some pictures of me enjoying that work. In that process of going to sites and seeing those projects with critical defects, we have looked back and kind of reflected on what are the main issues that are causing these widespread defects and failures. And for example, these defects range from anything from fires to delamination of solar panels to soldering faults. All of these things are very critical. And the three things we've narrowed it down to are shifts in suppliers for three different reasons. And those are sharp spikes in prices, volatility in timelines, and then volatility and capacity of products. And especially, cartoon cracks me up every time, especially in a market that we are in where everything is extremely volatile and we don't really have a firm understanding of which supply chains will be safe and which supply chains will be robust enough to survive for the next 3, 5, 10 years. In fact, month to month, we have to manage these risks and have protocols in place to be able to switch between manufacturers and suppliers very quickly and without adding a lot of risk to our projects. So like I said, there are three main issues, and I'd like to cover each of them in a little bit of more detail, just because they all have some underlying ramifications that I think are not spoken about enough. So the first one is pricing concern. There are a lot of reasons that prices for the manufacturer who you're working with could vary or spike. A lot of those, for the US perspective, revolve around different UFLPA regulation, shifting supply chains, anti-dumping and circumnavigation duties that add a lot of financial stress to projects, so you have to switch suppliers as well. And all of these things will make you switch suppliers. But again, as the timeline shortens and you're just trying to satisfy that price threshold for your project, the proper due diligence for the technical side of the project, for the risk mitigation and the quality control of your project may fall in the priority list, as you have to satisfy that price or a project cannot move forward. So there's an inherent risk there, even though you're satisfying that price concern. The next thing is a timeline concern. And again, a lot of these concepts overlap, but we've seen a very much an expanded timeline for critical elements such as transformers and bottlenecks and other heavy equipments like switchgear, which are singular for a project. And if they're not obtained in a timely manner and with a lot of time in advance, then a project can be delayed for a long time. So we're seeing companies who have to switch a supplier at the last second, and then they are burdened with that very long timeline for a transformer. And so they maybe go with a supplier that they don't know much about, or they don't have a lot of transparency into, or they have to rush through a contract and they don't check the quality control and they don't check the technical due diligence involved in making a proper selection because they want to satisfy that timeline. And again, timeline is an extremely high priority. So making sure that that's satisfied sometimes does push things out of the way, such as quality control. But again, there are ramifications for that down the line. And the last thing is capacity concerns. And this has been seen and felt very heavily in the United States as domestic content has pushed to the forefront of a lot of purchasing for projects. And the issue with that is supply chains in the United States are not extremely robust yet. And so the amount of capacity that can be produced of any given technology is minimized. And the effect of that is that suppliers have a lot more control and leverage to say, you know what, actually, we're not going to let you inside our factory to inspect and do these quality checks because you have nobody else to go to. Or really binding contracts that say, actually, we're going to have pretty relaxed technical standards in our contract because who else are you going to go to get better standards? So, and again, all of these are clear red flags, but it is happening in the United States a lot, and we get concerns about this all the time. And if you are pressured into signing these contracts because there is not a lot of leverage because the capacity is so low, then again, the technical due diligence and the quality control is pushed to the bottom because again, priority number one, sign that contract, get the equipment. The priority of making sure it's actually a quality piece of equipment will slide down the to-do list. So I've been thinking about this a lot actually, and me and my colleague Pierre-Yves, who is based in Switzerland, we're going through a thought experiment that I thought it was relevant enough to share. And basically, the thought experiment is we obviously live in a world that's very volatile, it's uncertain, it's complex, it's ambiguous, and all of those are elements that include risk. And if you understand that this is the case and this is the market that you are in, and you understand that risks will continue to come up, so you have to make a strategy to understand how to mitigate that risk, or at least be able to choose between the least risky option that still satisfies your project requirements. Then if you had a perfect understanding of the market, an omniscient understanding of the market, you could truly pick exactly which manufacturer satisfies every single metric: pricing, capacity, viability. All these things could be picked out exactly. If you had an omniscient, perfect understanding of the market, all the suppliers, all the pieces of equipment, what they do, how they function, what their actual prices are, you could make these incredibly precise decisions. Unfortunately, we are all humans, and so making these omniscient decisions is very hard. Not that it shouldn't be the goal, but it's not practical, right? But what is practical is to have a very focused and very deep understanding of things that are apolitical, that you can take account of and archive, that even if there is a shift and an issue comes up, then you can shift suppliers more agilely and with a higher safety rate than before. So for example, if you have a manufacturer and a regional embargo comes up and you can't buy from that supplier anymore, it would be very nice to have all the technical specs of a company from another region so that you can very quickly say, okay, this region is no longer viable for us to purchase from. However, we understand the technical and quality capabilities of this company over here. Now we can evaluate the commercial and legal issues to see if they still satisfy what we need for this project. And it's elements like that that are extremely important. And I jumped ahead, so this is the exact same thing that I just said. And basically, why am I saying all this? Theory is fun. These thought experiments are very amusing, but just presenting a lot of issues is not very practical and doesn't help anybody. However, the entire role at Sinovoltaics is, if I had to sum it up in one sentence, is this sentence right here. Sinovoltaics provides buyers transparency into potential and existing manufacturing partners. And basically all that means is our clients trust us and work with us because we give real-time, relevant information about suppliers that either A, they're very interested in working with, and so they want to understand, okay, this supplier with this facility in this location can produce this piece of equipment, whether it be a solar panel or a battery module or an inverter, whatever that piece of equipment may be. They gain insights into, okay, here are their quality control procedures, and we can trust that to produce a quality piece of equipment. And that's all we do, is we build these reports by going to these manufacturers and going to these sub-suppliers and understanding what their true capabilities are on the technical side, so that when your team wants to make a decision down the road because a tariff or a new US regulation has pushed one of your primary manufacturers out of contention, then you have these other manufacturers that you have previously evaluated for their technical ability, for their equipment, like that, and you can seamlessly slide into the new manufacturer contract and not mess with that workflow, instead of having to panic and do the full reanalysis as soon as the issue is caused. And the question I always get when I talk about this, and especially when I see these sites in action and projects are being deployed, and I'm seeing issues that I know my team would have caught if they had been spoken with during the manufacturing phase, if they had been spoken with contracting phase, these $1 million issues down the line would not be affecting the project at all. They wouldn't exist. And I'm positive of that because we've caught these issues before and we've stopped them from happening and we've stopped them from being shipped. But now I'm seeing them deployed in the field from different projects that didn't use our services. And these projects are causing extreme headaches and assets are not working as promised or models. So now many people down the entire value chain are losing faith in these asset classes because of that problem. I would say these audits, both for quality and traceability and for ESG, which is environmental social governance, do these as early as possible and with as many manufacturers as possible. This will give you a full understanding and a full ability to make educated decisions about what manufacturers are viable for your products on the line. And then once you understand this pocket of trusted manufacturers, a vetted manufacturing list, then you can go through and you can say, okay, now we would like these exact terms and clauses in our contract to back up the findings and the remediations that we found during the auditing process. It's an extremely powerful thing. And again, it doesn't cost a lot of money. It costs a little bit of foresight, but that's it. And if it's not done, then the penalty down the line is broken contracts, liquid damages, and $1 million in penalties and asset failures. So I just want to emphasize that these things can be fixed ahead of time with just a little bit of forethought. And basically, that's kind of our perspective is that if you look ahead of time and you predict out, okay, here are some scenarios that could disrupt our supply chain. And here are some scenarios where our a supplier of a specific piece of equipment could shift or is a bottleneck, then we need to plan and have a vetted supplier list to understand which suppliers are viable down the road if risk pops up in different regions or if the US government decides to snap their fingers and send out a tweet, which changes the entire landscape. If you know background of many suppliers that can satisfy your project needs, then transitioning between them becomes much more seamless. And the safety and risk is, there is a lot of safety and the risk is minimal, is what I'm trying to say. Okay, so that is our philosophy. And now I will hand it over to James, again from ArentFox, who will give us a full and detailed update on how the US market looks. James, good luck.
Thanks, Rylan, and thank you, Sinovoltaics, for inviting me today. This is, I think, my second time presenting in front of your members. Last time was in November of 2024, which seems like ages ago. And Rylan, I think you kind of started out our session today talking about how there's a lot going on, and I think that's a little bit of an understatement. That really there's more activity in this space in terms of trade policy and the investment landscape for this industry and also all industries that I've ever seen in my career, and you know, folks have never seen anything like this. So Rylan, as you said, I'm an international trade and investment lawyer in the US, and I do primarily focus on advising the renewable energy and advanced manufacturing space. And my presentation today, I'm going to start moving the slides over, is titled US Trade and Tariff Update for the Solar and BESS Industries. And again, it's very timely. These industries are now kind of squarely in the crosshairs of US trade policy. And, you know, Rylan, you spoke to the technical and the pricing and supply chain risks in these industries. And so I'll be focusing on the legal and trade landscape in this space that is driving those risks, right? So in the next 40 minutes or so, I'll walk you through the latest developments and how they impact your procurement strategy and what you can do to stay ahead. All right, so we'll start by reviewing the current trade and tariff landscape for the solar and battery storage system industries. I'll walk you through the IRA incentives, that's the Inflation Reduction Act, and where they currently stand and what you need to know to fully take advantage of them. And then we'll zoom out and discuss some forward-looking risks in 2025, and then wrap up with some practical procurement strategies that are tailored to this audience here, developers, EPCs, and investors. And then if we have time, we'll close out with some Q&A. All right, so solar and trade investment policy in 2025. So for solar, the current landscape is unfortunately quite complex and heavily trade restricted. And we'll start with China. China has definitely been the focus here. So between the Section 301 tariffs, which started in Trump's first term, and the IEEPA tariffs, which stand for the International Emergency Economic Powers Act, that's the authority that Trump has been using to implement these new tariffs of 20% on Chinese products. And then, of course, the anti-dumping and countervailing duties that have been around on Chinese cells and modules. Sourcing solar components from China is now extremely high risk. But the problem is that moving your supply chain to, for example, Southeast Asia isn't the solution that it used to be, right? So in August of 2023, Commerce issued a final circumvention findings that implicated Vietnam, Malaysia, Thailand, and Cambodia. And then after this 2-year moratorium that Biden had instituted expired in June of last year, the full impact of that circumvention duties have now come into effect. So, and to layer on top of that, there's been a new AD/CVD case that was filed in April of last year on cells and modules from these Southeast Asian countries. So Commerce has already issued a preliminary order imposing AD/CVD duties on cells and modules from those countries, and final duty rates are expected in the coming months. And then if you add in Buy America pressure, UFLPA forced labor enforcement, and also the metal tariffs that have been reinstituted under Section 232, national security laws, you have a very constrained supply chain for solar. And it could get worse, unfortunately. The administration is signaling that it may impose what they're calling reciprocal tariffs. These would be tariffs that would essentially match the tariff rates or other trade barriers that other countries are imposing on US exports. So this could hit many of our trading partners, including India, the EU, or really any country that the US trades with. Final thing I wanted to note is that the Inflation Reduction Act, which is the program that was implemented in the US to really incentivize domestic production of the solar industry, is still in place, but there are some questions about its long-term fate, and so we'll get into that as well. I didn't want to give short thrift to the BESS industry. Historically, for battery storage systems, I think the US has had a bit of a hands-off approach, but this has kind of shifted in the last couple of years. So one thing to note is that the Section 301 tariffs on Chinese batteries will go up to 25% beginning in January of next year. So that's something to keep an eye out on. And then, of course, with these IEEPA Chinese tariffs, which are now 20%, starting next year, these battery imports from China could be hit with a total of a 45% tariff. So that's very significant. Another thing to be aware of is there's an AD/CVD case that was filed on active anode materials from China. And the petitioners in this case are asking for duties of up to 900%. Yeah, that's correct, 900. And Commerce is investigating this currently. So that's something to monitor as well. If you are a developer that's seeking federal funds, then you have to look at Buy America compliance. And the thing about BESS products is that most of them are, in fact, foreign sourced, right? So many of them don't meet the Buy America thresholds at this point, right? So you may have to seek a waiver. And then finally, UFLPA forced labor enforcement is also ramping up for the BESS industry as well. So let's talk about Trump's trade policy in particular. And as everyone knows, it's very much focused on tariffs. Trump's messaging on this has been pretty consistent that tariffs are leverage in his eyes, and they're a form of protectionism. And in many ways, they're his preferred tool of industrial policy. So whether you agree with them or not, you really have to plan for them, because we're already seeing them being rolled out. We've seen the IEEPA tariffs, as I mentioned. The Section 301 tariffs are still here. But then, of course, there's talk about retaliatory tariffs, sectorial tariffs, which are tariffs focused on specific industries. And then, of course, tariffs targeted on specific countries like Canada, Mexico, China, potentially the EU and other countries. So this is not just rhetoric. This is really impacting real trade flows, especially in the solar and BESS industries. So on day one, when Trump entered office, he rolled out something called the America First trade policy. And so the whole idea here is that the administration is intending to use tariffs and other trade remedies to address what they're seeing as unfair trade practices in other countries, to address trade imbalances, and also to basically incentivize the reshoring of manufacturing in the US. And this slide here just covers, just sort of in a nutshell, all the different trade policy issues that are being reviewed, potential actions that could take place in the different the US agencies that are in charge of those, spearheading those different remedies or trade actions. So what is in place now are the, as I mentioned, the IEEPA tariffs, which are currently 20% across the board on all Chinese imports. And these are on top of existing tariffs. So that includes the 301 tariffs, any AD/CVD duties that are already in place. There are also 25% tariffs that were implemented on products coming from Canada and Mexico. But shortly after that, those tariffs went into place, the automotive industry, they pushed for an exemption, and basically what was carved out was if your products are USMCA compliant, and USMCA is the trade agreement between these three countries, then you can be exempt from these tariffs for now, right? So we don't know the fate of that exemption, but at least for now, you can be exempt through that exemption. Trump has also implemented or re-implemented the global steel and aluminum tariffs, basically getting rid of any exemptions, exclusions, any special quotas that were arranged between other countries. And so this 25% tariff is now in place. And it also is expanded in that it impacts a greater number of what are called derivative products. So these are products that include steel and aluminum inputs. And notably, that includes parts of solar panels and modules. So those are considered derivative products that are subject to these tariffs. And I think some of the products in the solar industry that could be affected are things like racking systems, mounting structures, and module frames. So that's something to look out for. And then keep an eye out for April 2nd. This is the date that the Trump administration has said is the date on which these reciprocal tariffs will drop. That could mean that it's simply an announcement that regarding the tariffs, and that the actual tariffs won't take effect until later. I think that's some of the latest news on this. But either way, April 2nd, something will happen, and we're expecting that Trump will announce this reciprocal tariff program, which could hit a wide range of countries. I think there are 15 countries in particular that Trump is, the administration is eyeing in particular. These are the countries that the US has maybe the largest trade deficits with. And the idea is that there will be sort of an average reciprocal tariff rate that will be imposed on that country, all products coming from that country, to sort of rebalance trade between the US and that country. So this could hit countries like India, Korea, the EU, which are currently not, affected by a lot of these trade actions. But that could all change. So I think to help companies and our clients that are affected by all these tariffs sort of monitor and keep track of everything that's going on, our firm has developed what we're calling a Trump 2.0 tariff tracker. And I put a link here, or I can share this link later on to this tariff tracker. But basically, this is a simplified version of it, but this is regularly updated real time to track both tariffs that are threatened by the administration and also the ones that actually take effect, right? So the ones that are in effect are the ones on China, Mexico, and Canada, as well as the steel and aluminum tariffs. So the solar industry, of course, is no stranger to tariffs. More than a decade ago now, AD/CVD duties were imposed on Chinese cells and modules. So this is something the industry has had to contend with for a while. And as I mentioned earlier, Southeast Asia, and these are the countries, I'm focusing in on are Vietnam, Malaysia, Thailand, and Cambodia in particular. These were the countries that used to be the sort of workaround for avoiding the Chinese tariffs, right? So companies were moving production of both modules and cells, including wafers, to these countries, but that door seems to be closing and may be on their way to be fully closed in the next year or so. And the reason for that is that, one, there was a AD/CVD circumvention case in which Commerce found that basically that there was circumvention occurring in these countries, circumvention of the Chinese AD/CVD duties, that is. And so unless your company can certify or was found to be non-circumventing, those companies are now subject to very high duties of as much as over 250% for cells and modules coming from those countries. And then to add to that, there's a new AD/CVD case. This is separate from the circumvention case. And this is an investigation on Southeast Asian solar cells and modules that are being produced in those countries. And there's already a preliminary finding, right? And it's looking increasingly like the final order will come down in the middle of this year. So if your supplier from that region is not certified as non-circumventing, then you should really assume that the cells and modules from those countries will potentially carry a triple-digit duty rate, right? So that's something to definitely watch out for. And to just give you some perspective, Commerce recently updated the AD/CVD rates for countries involved in this investigation, which is being called Solar 3. And the rates went up in some cases very significantly. So Malaysia, there's some minor adjustments here for those rates, but then for Cambodia, as you can see, the total rates jumped up to over 800% for particular countries under investigation. So that pretty much closes off sourcing cells and modules from those countries if these rates stay final. All right, so I wanted to shift to the IRA. I think the IRA is a little bit, maybe the silver lining here, right? This is the major legislation that the U.S. put in place during the Biden administration to really incentivize, clean energy manufacturing in the U.S. and the solar industry and the BESS industries have definitely benefited from this, right? So this is just a quick snapshot here of the different array of incentives under the IRA. And so on the demand side, there's a 30% investment tax credit. So that's back. And there's also the production tax credit, the PTC, for larger scale projects. And then on top of that, you can, if you're eligible, you can take advantage of some bonus credits if you meet, for example, domestic content requirements. That's a 10% bonus credit there. Or if your project is located in a designated energy community. Yeah. and if you meet prevailing wage requirements. So for manufacturers in this industry on the supply side, there's the Section 45X credit. So this offers per unit production credits, and currently they are 7 cents a watt for modules, 4 cents a watt for cells. And the good thing about these credits is that they are transferable, which means that manufacturers and developers can really monetize them to their full extent. And many companies have done so, and they've used that to raise capital. So that's been a huge boon to manufacturers and developers in the space. Now, with all that said, there's been a lot of confusion, especially related to the domestic content bonus. And so guidance on that has been a bit slow to emerge. And many developers and manufacturers are struggling to confidently claim that 10% bonus. But if you do get it right, then it can make a big difference to the return rate in your project. So shifting to the BESS industry, this industry has also significantly benefited from the IRA. Again, the ITC is available for projects in this space, and this is a bit of a change in that prior to the IRA, only storage that was paired with solar could take advantage of the ITC. But now, a BESS project that meets energy capacity requirements can claim that credit on project cost. So this could potentially be a 30% upfront subsidy for like a utility scale installation. The 10% domestic content bonus is also available, which could boost your total credit to 40%. But as we mentioned, that bonus is difficult to achieve for the BESS industry, given that a lot of BESS products are still sourced from overseas. And then manufacturers in this industry can take advantage of the 45X credit. That's $35 per kilowatt hour for cells, $10 for per kilowatt hour for modules. Also a credit for critical minerals as well. All right, so moving on, I did want to spend a little bit of time talking about that domestic content bonus and what you should know about that. And this bonus credit has been one of the more misunderstood elements of the IRA. So the thing to understand here is to be eligible for this credit, you really have to be using in your project 100% US-made iron and steel. So that's a condition of that bonus. But also, and this is potentially the more challenging aspect of it, is that a certain percentage of your project's manufactured product costs have to come from US sources, right? So in this year, it's 45%, but it's going to go up to 55% in a number of years. Now, there's been some struggle tracking some of those actual costs and making those calculations to meet this requirement. So Treasury released basically a safe harbor provision that lets developers use fixed cost assumptions for standard components. And this has been very helpful for developers that want to take advantage of this domestic content bonus. So the way that it works is that you can use predefined cost percentages for common project components in a standard PV system instead of calculating the actual supplier costs. For BESS, most battery cells and packs are still foreign sourced. So even if you are using US-made containers or inverters, you may still fall short of the minimum percentages here. So on that front, I really recommend that you work closely with your EPC or your integrator to audit your supply chain and to track domestic content. And developers that are planning projects for later this year in 2026, really now is the time to secure US-made components if you can, so that you can hit that 10% bonus. All right, so what is the fate of the IRA under this Trump administration? I think that's the big question. So The IRA has created, I think, something in the ballpark of more than $100 billion in clean energy investments and thousands of jobs, but it still remains somewhat of a partisan issue in the U.S. And the Trump has signaled that he thinks it's a bad deal and that he may want to roll back the IRA. Now, if that happens, then these incentives could be repealed or rolled back or defunded, basically. But I think on the other hand, the thing to know here is that many Republican red states have been the primary beneficiaries of these IRA incentives. And they've created, manufacturing capacity and many jobs in those states. So I think politically it may be difficult for Trump to find support in Congress to actually repeal the IRA in its entirety. So I think the bottom line here is, given some of the uncertainty regarding the IRA incentives, you want to lock in your projects and credits sooner than later while these incentives are still around. All right, now turning to Buy America requirements, and then specifically the Build American, Buy American provisions under the Bipartisan Infrastructure Act. The thing to know here is that if your project relies on federal funding, for example, DOE grants, then you have to comply with Buy America. What that means really is that all the iron and steel in your project and basically almost all of your manufactured products have to be US sourced. Now, this has been difficult. These are difficult requirements to meet for the BESS and solar industries. And so for the last couple of years, agencies have been issuing waivers because BESS and solar components were not actually available domestically. But the expectation is that by the middle of next year, those waivers are expected to expire, and then enforcement of these Buy America requirements will tighten. So if you're applying for federal funds, start aligning your procurement now based on that expectation. Talk to your suppliers and know whether their products are compliant. You don't want to wait until a grant is awarded to find out that, for example, your batteries aren't eligible. Okay, so I wanted to spend some time sort of to conclude our presentation today to talk about the procurement strategies that you might want to pursue given all that's happening in the space in terms of trade and investment in these industries. So these are some of the things that we are recommending now to our clients. And I think the first thing is, if you can, secure your US supply now, right? Especially for manufacturers that qualify for the 45X credits, because their products should be competitively priced given the incentives they were able to take advantage of. Secondly, I would negotiate flexible supply agreements. If you can, your supply contract should include maybe tariff pass-through provisions or change in law clauses so that, if there is a sudden shift in trade policy, your project isn't derailed by that, right? So you'll have some flexibility there. Third, if you're sourcing from, especially in the solar space, if you're sourcing from Southeast Asia, you want to make sure your suppliers are compliant with their non-circumventing certifications, right? Otherwise, if they were found to be circumventing, then, but they certified that they weren't, then you could potentially face significant back duties or penalties from customs. Fourth, really you should be verifying your domestic contents compliance early. You're taking advantage of that domestic content bonus under the IRA, excuse me. And then, you utilize that safe harbor cost percentages methodology to avoid, audit risk and to preserve your eligibility for those bonus credits. You should be monitoring those waivers under the Buy America Act which are again set to expire in the middle of next year. So if you have a project that's taking advantage of federal funding, that's very important, and to line up suppliers who are compliant with those requirements. And then I think Rylan mentioned this in his part of the presentation, but you want to do the legwork early and your due diligence early with regard to looking at alternative suppliers, right? And if you can, diversify your supply base, right? Because if you're over relying on just one country, whether it's China, Vietnam, or India, I think that really exposes you to more risk, right? So you want to be in a place where, if you need to, you're prepared to shift to another supplier that, of course, has kind of met your quality control and other capacity requirements, right? And then the last thing here is you really should be engaging your trade counsel and actively managing your risks. So whether it's understanding your tariff exposure, your UFLPA forced labor risks, or maybe you're trying to identify duty mitigation measures, right? If those imports that are coming across the border are not complying with these requirements, then it can be very costly and it can delay projects, both for importers of these inputs and also for, of course, downstream developers, EPCs, investors in this space. So I think being proactive here is really important, and it can save you time, money, and headaches. So what's coming ahead? These are the things that I want to leave you with before we turn to any questions. And I think if you're developing, if you're a developer or EPC or investor, I think these are the things that you should be aware of. So in the middle of this year, we should expect the AD/CVD, the Solar 3 case investigation to be wrapping up. And if there's a positive determination, then those duty rates will become final, right? And so and many companies have already planned around this and have shifted their supply chains for the US market out of these countries. But if you haven't done that, or you're still at risk, that's something to keep an eye out on. April 2nd, so is the date that that's not far off. I think it's next week, that Trump administration is planning to announce its reciprocal tariff program. So there's been a lot of speculation about this, and right now there's no details, but that's the date to watch out for. And by then we'll have a bit more clarity as to which countries are going to be subject to these reciprocal tariffs, what the rates will be, if any countries have sort of negotiated lower rates with the US, if there will be any mechanism for escaping from these reciprocal tariffs. I think these are all things that we'll be watching out for when that announcement drops. Buy America enforcement, as I noted, the waivers are set to expire, and enforcement will tighten in the coming year and starting next year. And then as US solar and battery manufacturing capacity starts coming online, there will be more compliant options in terms of, Buy America, meeting the domestic content, bonus requirements, and so you should be looking at those suppliers. But of course, this is a new industry in the US, so it's very important to audit them to make sure that they can really meet your expectations in terms of pricing, in terms of quality control, and all the things that Rylan mentioned. It's going to be a lot of volatility in the space, but there's also a lot of opportunity. And I think companies that understand this and really understand and can monitor and keep track of this evolving trade and investment landscape, I think they will have the competitive edge. So I'll kind of leave you with that thought, and we'll open it up to any questions from the audience.
Lovely. Thank you, James. Yeah, I think if there's one overall message from both of our presentations, it's think early about these things, and you can avoid a lot of headache, a lot of wasted time, and a lot of costs. So if there's one takeaway, I think that's it. All right. We do have a lot of questions from the audience, so I will start reading these through, and we'll kind of divvy them up as the expertise required. We'll start with Gemsy. All right. Efforts to establish a domestic solar glass supply chain are not being established in the U.S. module manufacturers. Do you have any insights onto why that is? Any thoughts, James?
Yeah, so my understanding is that solar glass is still mainly sourced from China, and that there's virtually no solar glass supply in the U.S. I think glass is just its own beast, right? It's not a supply chain that has traditionally or has been here in the U.S. for a long time. And so, if you're a U.S. module supplier, they're not really set up to produce glass themselves, right? So, I mean, a U.S. module supplier has to source its own raw inputs from, other countries, including, overseas. And right now, that's from China for glass. So those glass imports are being hit with significant tariffs, and I think it remains to be seen whether or not the administration will allow exclusions because of the fact that there's no domestic supply. There were some exclusions. I think there currently are still for tempered glass for the Section 301 tariffs, but those exclusions are set to expire in the next couple of months. So I'm expecting a push from the industry to get maybe some exemptions for solar glass.
Got it. And yeah, from my side, I would say that I've heard of a small handful of manufacturers who are attempting to establish partnerships right now. I know of one manufacturer who's trying to get a partnership on their own property to be able to handle glass production, but I think that's still a little while out. And yeah, the incentive hasn't been there long enough to have the supply chain been established. So, yep. All right. Next question. This one from Dino. A couple questions in here. This one is for James first. If a solar panel is assembled in a country and accompanied by a certificate of origin that is different from the sum of its components, under which company does it fall in regard to tariffs? This feels like a SAT question.
Yeah, okay. Is it based on the origin of cells? Is it the aluminum frame or glass, right? Or is it based on a sort of percentage of the value add, I think is what you're asking. So Dino, it's good to see you. Thank you for joining today. This is a common question we get, not just in the solar space, but for customs compliance in general, right? Because a lot of these tariffs hinge on the country of origin, right? Especially the China tariffs that we're looking at, both the IEEPA ones and the Section 301 tariffs. They're based on whether your product is country of origin China. So if you have a solar module, and this is true for, I would say all or most solar modules, they have inputs coming from multiple different countries, right? So that's really a question of whether or not the solar module that's, let's say, assembled in a third country, right? Let's say, I'm going to say Turkey, right? But it uses Chinese cells. Is that product, and this is a legal test, is that product substantially transformed in that country of assembly, right? In Turkey, for example. Now, I can tell you that as a general matter, Customs has said that if you're using Chinese cells, then that solar module is going to be Chinese, right? It's hard to get around that. Now, when it comes to substantial transformation questions, though, it's very fact specific. So I'm not giving that as legal advice, but I'm just saying that's sort of the general rule of thumb. But that's something that you want to look at. If you are assembling in a third country, whether or not there's a substantial transformation occurring in that country that would transform that product into a country of origin of that country, right? So sorry to give a mixed answer there, but that is sort of the way these things shake out.
Yeah, and generally, again, from my perspective, it's all around the conversation, right? So if you aggregate this data, you actually dig in, you look at all the traceability documents, and you look at all the components, and you have all of that in front of you. These things clarify much better than generally. So if you are going in and doing that proper due diligence, collecting all that documentation to prove domestic content or to prove whatever you're looking for, collecting that documentation is step number one. Having that transparent conversation with your manufacturer, maybe a third-party entity if you need some technical legal advice, and then just putting down what the facts are. It makes all these things very much transparent. Next question from Alex. How are companies in the solar and storage industry adjusting their import strategies in response to early regulatory change? I can do a little stab, and then James, you could fill in.
Yeah, sure.
I know that the most classic thing that we've seen is the assembly process going on in the United States. A lot of the guidance is described usually like the full container first and the full solar module first. So those were broken down and shipped separately. And then assembly was done in the US. I know for batteries, that's still happening a lot, where it's broken down into subcomponents, PCS, container, cells, and then they're shipped all separately to avoid some of these defined metrics for what a containerized energy storage solution is, or what a solar module is, things like that. So just breaking it down, and then obviously also jumping the supply chains themselves into different locations that are not under such scrutiny, and then importing them from those places. But as we've seen in the past, that's a 1, 2, 3 year game where these manufacturers are jumping regions of supply shipment, and then they get hit with a new duty. So, James.
Yeah, it's a little bit like playing whack-a-mole, right? Because
yeah, exactly.
Companies are shifting their supply chains or their production to different countries to try to avoid the tariffs, but then the tariffs come and find them, right? So it is very challenging. And I mean, the main thing to know is to really stay informed, right? But I have a couple of thoughts here. One is that, for example, the IEEPA tariffs in Canada and Mexico, they currently have that USMCA exemption, right? So if you have any of your supply chain coming from those countries, you really want to look at whether or not your products qualify under the USMCA. I think when it comes to solar modules, the qualification is actually pretty easy. And so, that's a benefit of the USMCA. Other thing that we've been advising, there are traditionally a lot of tools in the customs compliance space that can help minimize your duty impact. And one, without going too much into the weeds, has to do with your customs value, right? So anything that's being imported into the US, you have to declare what the value of it is, right? Whether it's solar glass, whether it's a solar module, whether it's a battery cell. Now there are some strategies there legally to see if you can make some adjustments to your customs value that would maybe lower your duty exposure. There's something called a first sale methodology, where you're declaring the price that's provided by the manufacturer to the middleman. That's the first sale, rather than from the middleman to the US buyer importer, right? So that could be a potentially lower price that you're declaring, but you have to meet those requirements, the first sale requirements, to take advantage of that. So that's one strategy, and there's others. Some companies take advantage of foreign trade zones in the US, or duty drawback programs if they're eligible for that. So I mean, these are some of the things that we do regularly to advise companies on, to see if there's some duty mitigation opportunities for companies that are facing these tariffs.
Nice. That's a great answer. We'll go to Mark real quick. Is there a risk that the latest AD/CVD investigations could lead to retroactive tariffs and on panels already imported into the United States? James?
Yes, there is. Very good question. So if there's a surge of imports that happen sort of prior to the final order taking effect, and you can see why there might be, right? Because countries that, or excuse me, importers that are trying to avoid the tariffs before they hit, they may, kind of increase their import volume ahead of that. These are called critical circumstances. If commerce finds that these conditions were met, then there could be a retroactive application of those tariffs after the final order. So that is something to be aware of. So if you are importing from those countries, that's a risk that is out there.
We have a lot more questions and about 13 seconds left on this webinar clock. So I would say that we will go through and answer these questions in a written format and post them separately. If anyone would like to see those, they will probably be posted on LinkedIn. So go follow James and myself on LinkedIn. We will be posting an article about this webinar as well as the full video transcript of this presentation. So go reach out to us there, and we look forward to talking to all of you in the future. See you guys. Thanks, James.
Thank you. Thanks for having me. Bye.
Visit Sinovoltaics.com to learn more.